welcome back to another review. I have Daniel here with us. Daniel, it's been a long time since you've been on a video with me.
Has it?
Yes, it has, and you know it has. So I know you've joined the radio show. So for folks out there that have not listened to the radio show, you need to go listen to Savings and Cents. You can get it on a podcast anytime on Apple and Spotify. I'm doing a selfish plug right now.
Best radio show of 26.
It's fantastic so far, and it also is 8 to 8:30 on WLAP if you're in the Lexington area. So definitely check it out there. But Daniel, you've joined me on that. But I convinced you today. It didn't take too much. You were like good to go for a video. So I'm glad you're on.
Yeah, you're very convincing in general.
Fair enough. Fair enough. So what is going on in your life? Update us a little bit. I mean, you have 2 growing boys. You have now moved into a new home. I mean, you had a lot of life updates that have happened.
Yes, we moved just down the road from where we were previously. Kind of a little bit larger home. Got a basement. Kids are growing up.
Yeah.
Fourth grader and a first grader. We needed some workout space. But yeah, we have an awesome... The kids are really into Legos right now. We have a lot of Legos. Legos are what we're invested in 26.
Sure.
Let's just say that.
Yeah.
I mean, they each got like 10 different Lego sets for Christmas. It's ridiculous. But we have an entire basement now full of Legos.
Nice.
So pretty awesome. But yeah, they're growing up. We're having fun.
I went recently. Hannah and I went to your younger son's soccer game. He's a baller. So that's fun.
Yeah, I coach soccer, which is awesome.
Yes, the best part about that is we went to the game. Daniel's coaching, his son is playing, and Daniel has this amazing T-shirt that just says "Coach" across the front.
Yeah, they give that to you for free just for coaching.
Sure, but it's pretty great.
Yeah, that's my payday right there. But yeah, it's awesome coaching soccer. I actually had to watch a lot of YouTube because I played soccer as like a little kid, but I didn't play seriously. I actually didn't know a ton about soccer, so I had to like learn. So
ChatGPT,
Yeah, but I started what 2 years ago, I guess, coaching when he was pretty young. So you didn't have to know much then. You just had to. It's crisis management. You're just like move the pod of kids around the field and all that. But now we're playing some really good kids, and so having to try to coach and teach them some stuff. But it's really fun. It's a great way to balance life, right? So we spend most of our days in financial markets and dealing with, pretty significantly weighty things at a time, helping people with their financial plans, dealing with economics and markets and finances and all that. So it's nice to take a break on Monday evenings for practices or Saturday mornings for field and kind of tune out the noise and for an hour there just to really pour into and invest in 12 kids.
That's a lot of fun. That's a lot of fun. Now, for those that don't know, one, they need to go back and read your annual letter that you just sent out a couple weeks ago, and you kind of gave a breakdown of everybody and what's going on at the firm. But those that haven't heard from you in a little while, can you talk about what your day-to-day looks like with our team and expanding and growing our team over time?
Certainly. Yeah. So a lot of my purview is one, kind of overseeing our financial planning philosophy, leading the financial planning team and helping kind of our financial planners grow.
How long have you been a CFP now?
Oh boy. 10 years,
maybe?
Yeah. And then don't quote me on that, but it's been a while.
And then you helped me through that process too.
Yeah, so it's been fun, and we have a couple others going through the process right now. So both Andy and Allie are in their kind of coursework for the CFP, and Caitlin on our team has already finished her coursework, finished her test, and she will be she'll get the CFP designation this summer.
Great.
So in short order, within the next 12 months, we'll have 4 CFPs in our office and then 1 provisional with Andy, who will get it over the next 2 or 3 years.
Yeah, absolutely. And you're kind of working to, one, develop that team, work on that team, and then overseeing, like you said, the financial planning department and making sure we have a good handle on things there.
Yeah, totally. And then just our general business operations and strategy. So as we continue to grow the business, as we continue to look at how we can serve more clients and serve clients better, a lot of what happens in the business infrastructure is something that I will spend the day-to-day on. So if I'm doing my job well, then you and Allie are not having to think about anything that has to do with the business, and hopefully spending a lot of time making our clients incredibly happy and feel incredibly secure with their financial plans and so forth. So I just try to kind of free you guys up as much as possible to run fast with all of our great clients.
Yeah, absolutely. Well, Daniel, let's shift gears a little bit. Let's get into the markets, talk about what's going on this week. I'll start with the Venezuela news that we had earlier in the week. Not a whole lot of updates necessarily on that. I think there's whispers about Greenland out there, or maybe Panama Canal. There's some things, and there's a lot of political pressure that's been on this week, ups and downs across the world. Lots of headlines out there from a political standpoint. I think some of the big things we're watching is what happens in oil markets. Obviously, we talked about that on the email I sent out on Monday, so go back and read it if you haven't. That's a big focus. And then also to see what China does with Taiwan, as that has been a will they, won't they thing for several years now, it feels like. So those are kind of the two big things that are going on with Venezuela. But we did have new economic headline data that came out today when it came to jobs data. So do you want to talk a little bit about that?
Yeah, so we got somewhat of a mixed jobs report, right? So payrolls were actually under expectations.
Right.
But the unemployment rate was better than so lower.
Yes.
Which is unemployment rate, so we want that to be lower.
Yeah, new jobs we want to be as high as possible. That was lower than expected. But unemployment we want to be as low as possible, and it was a little less.
Even less than we expected. So it came under what, 4.4%.
Right.
Expectations were around 4.5%.
Yep, and it was 4.6 last month, so
which got revised down to 4.5.
Yeah, that came down a little bit as well.
So all around, what we're seeing is the unemployment rate, the amount of people unemployed, better than expected, which bodes well economically.
Right.
Coming through the holiday season and into the new year, it sets us up really well. And then elements of that unemployment rate, the different sort of classifications of employees and demographics and things like that, we're just seeing improvement in a few of those key areas. Participation rate was slightly higher, to unchanged.
A little bit higher.
Participation rate is important. It's an important element of the payroll report, because it's not just that we want the unemployment rate to go down, but we want more people participating in the job market with that unemployment rate going down. What that means is that we have more people that are willing to be employed, look for jobs and things like that. So if we have a lower unemployment rate with more people participating, that's the best of all scenarios, right? Because if you had a low unemployment rate, but you had a very low participation rate, then you have to kind of stack on the non-participating people into that unemployment rate.
Sure.
And it artificially lowers that number. And this is what we saw during periods of previous financial sort of economic turmoil, right? When your participation rate lowers, and you're like, oh, well, the unemployment rate's going down. Yeah, but not as many people are wanting to work.
They don't even feel like they can, right? Because they can't find jobs or whatever.
Yeah, so we want to be sensitive to that. And we kind of dive deeper into kind of the analysis. So, the headline report comes out, it hits our phones, Wall Street Journal, CNBC. But I saw you, really going through and dissecting those numbers and understanding what it meant for our clients, and we talked a little bit about that throughout the day in the office.
Yeah, exactly. And then the market rose on that news. So the market's had a pretty good close to the Friday. It's been a good week overall to start the year after one day last week. So markets are seemingly liking the news. The economic data that came out today from the job standpoint, it has everything to do with the Fed. Like really, that's what the focus for the market is with this underlying data, what will the Fed act on? And with this, so far, when you look at the projections of will the Fed continue to cut interest rates, it looks like they're going to likely hold off based on this data report. Now, that can change any day. There could be a lot of other news that comes out. But so far, it looks like from, hey, economy might be stabilizing, jobs might be a little bit more prevalent, less unemployment, then maybe the Fed doesn't need to cut rates as much. Market reacted positively to just some stability in the overall economy. Whether that's the right thing for the Fed to hold off cutting interest rates or not, I'm not so sure, but we'll have to wait and see as more economic data continues to come out. But right now, it looks like the Fed will likely hold off on cutting their interest rates. Markets have just been positive all week. We'll see how investors continue to dissect data as it comes out and continue to see if the Fed's not cutting interest rates, what does that mean for the overall markets? Because typically the market has wanted interest rate cuts. So we'll kind of have to see how that plays out over the coming weeks.
Yeah, and at this point, they're really searching for that magical neutral rate, right?
Sure.
I mean, they're not wanting to necessarily ease or stimulate the economy. The economy's doing, for all intents, I mean, there's parts of the economy, right, that we wish would be better, right?
Right.
I think we all would like grocery prices maybe to not be where they're at sometimes, right? But the fact that we've had inflation in the grocery prices, are strong is indicative of a strong economy.
Yep.
Right. Housing prices have remained strong despite interest rates going up. Arguable if that's indicative of a strong economy. But like the Fed is searching for, how do we lower the rates to kind of a neutral point to where we're not restricting and we're going to pop a bubble at some point. But how do we not lower so far that we induce a bubble basically by easing to the point that we're actually easy and stimulating the economy to where we have that surplus. And man, I don't envy their position here because there's a lot of mixed signals in the market. But as you talked about, unemployment, which is one of their key mandates, actually looked, all intents and purposes, pretty good.
Yeah, exactly right. So as we roll into the next couple of weeks, we're turning the corner into earnings season. We're going to be talking a lot about what is going on in these companies, and that's really going to be the barometer. That's the scoreboard we always look at each quarter, is these companies actually coming out and saying, this is how we've done. This is how the consumer reacted. So we're going to dive deep into that. I'm sure we'll give you some more updates. Daniel, thank you so much for joining me. I think you might have walked yourself into more appearances. So sorry, but you're going to be doing it more often. We look forward to seeing you next time. Make it a great weekend.